My name is Benjamin Tsai. I'm a co-founder and president of Wave Financial. So thank you very much for coming today. Today I'll be talking about kind of what we do and really more as an update to the crypto market. And this is a presentation actually, or part of a presentation that we did yesterday. We had actually a Japanese session of this. I had Charles Hoskinson pipe in on Zoom, and we had talked about kind of the markets and so forth. So that was in Japanese, and this is in English. So I think this is a good contrast in terms of the content here. So I'll start with our firm and just a quick overview. As I mentioned before, my name is Benjamin Tsai. I come from a traditional finance background. I spent a number of years in Japan and the rest of Asia doing traditional finance, and about 7 years ago, I switched into crypto. And about 4 years ago, started Wave Financial. We are an SEC registered investment advisor. We ran at the peak probably about $2 billion, and because of, I guess, market beta, we're down to probably half a billion roughly. We run a number of different funds, and we provide a number of different services in terms of asset management, wealth management, treasury management, and so forth. We work closely with a lot of the large protocols, and we provide a variety of services for them in the crypto space, and that's been something that that we've been really leaning into, that we think is a great business to be. Right now, there's actually not a lot of firms in this space that's providing that type of service, really white glove, private banking, treasury management type of service, and I think it is needed. Just to be clear, we're a registered investment advisor, so we're not an OTC desk, we're not a broker-dealer, we're not trading against the clients, we represent the clients into the financial market. So from that perspective, we're relatively unique. Moving on, I'll talk a little bit more about the markets itself. As everybody probably knows, this year has been a really tough market year for crypto. Just kind of listing a few of the large events that happened this year. The first big event was the whole blow up of Terra and Luna. This is something out of Korea, stablecoin. I think everybody's to a certain extent familiar with the whole setup. By holding Terra, there was a very large yield to be had where you can stake the Terra with the Anchor protocol, and they were providing a very high yield for people to hold Terra. And to get into Terra, you had to buy Luna, which is kind of the paired token from their ecosystem. And that set worked really well when the assets were ramping up. So on the way up, that teamed up really well. But unfortunately, when things became unstable, everything unwound, and on the way down, it was very quick also. More specifically, for our firm, we've been actually monitoring this a lot. We put client assets into this trade, but we were a little bit concerned about the structure of this and how it's supported. I think one of the biggest concerns is that I think the piggy bank that was paying this 20% yield out keeps becoming empty, and they have to keep refilling the piggy bank. So the question was always, when are they going to stop refilling the piggy bank? That was the big concern from my perspective. So we were monitoring the market, and one fateful Saturday morning on May 7th, we realized that the curve pools were starting to get unbalanced. People were taking money out by using the curve pool, and they're leaving excess Terra in the pool and taking out the other assets that are higher quality. So we thought that may have been the start of the bank run. So we took all of our clients out that Saturday, May 7th. We took the clients out at about 99.5. So no real losses there. And as you can see, we probably could have stayed another day, but that probably didn't really make a difference. By Monday, everything started falling apart. It was an extremely hard thing to trade. There were a number of people that were shorting it on the way down too, but Monday it actually spiked back up temporarily. So a lot of people were short also, did very poorly, got knocked out of their short position. So it was an extremely tricky thing to trade. But over the long term being about 5 days, that went really down to really meaningless numbers. So it was a tough trade. We feel very lucky, very fortunate that we caught that relatively early and got the clients out of their position. So that was the first major event that we had to suffer through this year, and as all of you know, there were a lot of impact associated with that. So a lot of other people were in this, along with some of the other trades, and that really pulled things down. The first major blow up from a firm level, separate from obviously Terra Luna, is Three Arrows. Three Arrows, a hedge fund out of Singapore. They had a lot of leverage position, this being one of them. And they unfortunately blew up. And when they blew up, they took out a lot of other people because quite a number of platforms were relying on them to generate alpha there. So basically, Three Arrows was paying out a high yield, and they were taking on a lot of deposits from a lot of the funding platforms, such as Celsius, Voyager, BlockFi, and so forth. Those large, more retail-oriented platforms were basically trying to gather assets from, for example, the U.S. and other places on the retail side, and they would turn around and hand that asset over to Three Arrows. Three Arrows was promising a very high yield, and these platforms were taking a spread. And Three Arrows was marketing themselves as a market-neutral, low-risk, high-return platform. They did extremely well through a number of cycles before this, so people had a lot of faith in them continue to do well. But unfortunately, the Terra Luna thing, along with a few other positions, that they really kind of blew themselves up. And when they did, they just didn't have enough money to return, and they basically declared bankruptcy. And then at the same time, because of that, then you had Celsius declaring bankruptcy, Voyager declaring bankruptcy, BlockFi at one point was bailed out by FTX, and a number of other platforms went out also, likes of Babel and a few others. So just kind of back to Wave Financial, we've always been a big believer in double checking who our counterparts are and who we trade with. And so we had a very strict credit process where we review exposures of clients or of our counterparties. What we would do is we would ask for quarterly reviews of the balance sheets and also regularly speaking with their CFOs. So through this process, we weeded out the likes of the companies listed here, the Three Arrows, the Celsius, the BlockFis, the Voyagers, the Babels of the world. They didn't provide enough financials, and we weren't very comfortable with them. And from my perspective, coming from traditional finance, this was a little bit obvious, but it apparently is not the case according to many other people. A lot of people kind of took other people's word for it in terms of the collateral, and they kind of went with that. We actually were speaking with all these people, and we're interested in trading with them. I mean, we spoke with Three Arrows. We had contacts with them, and they were wanting to borrow money from us or having us provide them with capital so they can trade it on our behalf. So our question was, can you show us your balance sheet, show us your income statement, show us how you've done, and so forth. And they came back, Kyle Davis came back with a single line. This is our AUM. I think it was about $2 billion. And it was a single line, and it's signed by Kyle Davis. It's like, this is all we're going to provide to you. I said, well, how much of that is liability? How much of that is asset? What do you hold? What do you know? No, that's all you're getting. And it's funny because in retrospect, I went and spoke with a few other guys, and they all got the same thing from Kyle. But a lot of people were comfortable that they got the AUM and that they started allocating to them. So, it really is shocking that people were not being very careful. So. Another interesting one was Babel. Babel is a firm coming out of also Singapore. They were a separate platform. It's funny, I spoke with them after the fact, and they're like, oh, no, we didn't blow up because of Three Arrows. And we said, well, how did you guys blow up? They're like, oh, we took our own positions. And I was like, great, okay. So they blew up with the same reasons, on the same trades as Three Arrows, but they didn't give their money to Three Arrows. So I guess we give them a little bit of credit for not following the same goal as other people. But they unfortunately blew up, and the biggest issue was that they took client assets and traded it, and that was the problem. And kind of a funny but not really funny story is that Babel actually had gotten a warning about a year ago because they were taking client assets and trading it. So they were given a warning, they promised to not do it again, and they did it again and blew up from it. So, it's very unfortunate. The year ago event, because markets were doing so well, it wasn't a big deal that I took client assets and traded it, actually worked well. So even though they were given a warning for using their client assets when they're not supposed to, they apologized and all that great stuff, but they made money. So I think that was what kind of got them greedy. And the second time in a not so good market, that didn't really work. So we saw similar things out of Voyager also. Voyager gave money to Three Arrows, Voyager gave money to Babel, and both of them didn't do well. And that's basically kind of really relying on others to generate alpha. And until this whole thing blew up, people were very excited by all the yield that was generated by Three Arrows. Three Arrows was showing a lot of money. But once everything blew up, when you took a quick look and everything became open because everything's in bankruptcy, you noticed that all the money was being really channeled to the likes of Three Arrows and Merrill. And not anybody was generating their own alpha and paying that out. So it became an arms race between the likes of Voyager and BlockFi and Celsius, but they were all kind of taking it from the same original source that blew up. So from that perspective, it was interesting in a very odd way. But it's always easy to say after the fact. During a bankruptcy, you look at all the papers, like why would you do that? But during the middle of it, obviously nobody checked with anybody else where they're getting their alpha from. So from that perspective, I think it's something that we're learning in this process. As an interesting side note, we actually bid on Voyager. Wave Financial actually bid on Voyager, trying to get it out of bankruptcy. So we spent about a month and a half in the whole bankruptcy process. It's over, so I can talk about it at this point. We were actually the high bid going into kind of the auction week. It was the week that Salt Conference was there in New York. We all flew into New York. Our CEO actually was at the actual auction location where the bankers and all the bidders showed up. We were the high bid going into the auction process. We bid, I think, started with $20 million plus, kind of back end incentive sharing if we bought the business and did well with it. Plus, we were going to try to save the VGX token, which is Voyager's native token, plus this and that. So we threw in a whole bunch of things. What our estimate is, the total value of that package was probably over $100 million, and that was what we thought was a fair bid for what was there. And then, so we were bidding against FTX. At that time, they didn't want to take Binance's bid because they said Binance is international, so CZ complained because FTX officially is international also. Anyway, so they got into a tussle, but Binance was prevented from bidding on Voyager at the time. So it was us against FTX, and whatever we bid, they were going to bid more from an upfront perspective. So we started at 20, they bid more, we went up to 30, we went up to 40, went up to 50. And at one point we realized that our total package didn't matter. All the lawyers were just looking at the upfront, so we kind of gave up at 50. And the result at that time was $51 million cash upfront bid. And they were actually not giving any kind of back end. They were going to throw a lot of coins out the door because they would support them. And it was actually not a really good process from my perspective. It was one of the few times I've been involved in bankruptcy, and I didn't really think they handled it very well. And not to laugh at the situation, but obviously at this point, FTX blew up, so that bid is no longer good. So they put Binance back, Voyager back into auction, and you guys probably saw very recently that Binance actually this time around won the bid. We were also asked if we want to come in and bid, but the value of the assets has gone down significantly since then, and we just didn't feel like it was worth the effort. And at the end of the day, if we went and bid against Binance has all the money in the world also. So well, heck, let's just leave that. So I think also there's a lot more regulatory pressure now compared to the last time around. So it was probably best that we didn't get too involved in that trend. So so that's kind of where we're at with regards to that, that round. Moving back to the next big blow up, which is something I already mentioned, which is really the FTX Alameda blow up. And very simply speaking, Sam Bankman-Fried that ran basically the whole organization was using FTX money, the exchange money, on the Alameda side, which is his hedge fund side, to do trades. And when the trades didn't go well, that became a problem. I would say FTX Alameda actually had the same problem that Three Arrows did. They all had similar trades. They were extremely long. The extremely long trade does really well when in a bull market. Right? When the market's going up, if you're long, you're making money, everything looks great. When it starts going down, that was when the problem is, and people kind of double down and so forth. But still, it just was a not a good position. So, we were talking with the Three Arrows guys before their bankruptcy. They were just really loading up on positions, hoping that it would turn around. So, we understand that FTX, Alameda was doing the same thing. So Alameda was taking leverage positions. As it did worse, they kind of doubled down and did more and more. And I guess at some point they started really using FTX assets, and that is a big no. So now they're blown up. They've declared bankruptcy. bankruptcy, and even after bankruptcy, I think there was, it's not very clear, but there was a hack where somebody went in and removed about $400 million of value off that exchange also. So, some people like maybe Sam did it, some people were saying maybe Sam was forced to do it by the Bahamas government. It was not very clear as to, what really happened with that $400 million. So hopefully we'll find out at some point. So Sam has been arrested. I think as of today, he's being flown into New York. He's been extradited, and he will be going to court. It sounds like his co-conspirator is the former head of FTX, Caroline Ellison, his one-time girlfriend, and also the other guy, something Wang, and they're both Gary Wang. I think they have both turned on him, so they're getting, I think, lighter sentences. The sentencing hasn't been done yet. I think they've taken plea bargains, so they've probably rolled on him. So I don't expect Sam to be leaving jail in a hurry. I don't think there's enough. There's nobody for him to roll on because he is really, at the end of the day, the person they want to go after. And I think there's probably too much political heat for any specific politician to step in and try to save the guy at this point. So, I think, we'll probably end up going to jail for quite a bit of time. So, but we'll see. We'll go through the process, and we're hoping the process will at least show what had happened through. But certainly, it's not a great situation, and it's something that we're quite unhappy that all of these things keep happening in this market. So that's basically three major blowups. But if you think about it, the FTX, the Alameda FTX is kind of just really part of the second blowup. It just happened later because they had more money and they hid it for a bit longer. The next big thing that is still out in contention is the DCG group, digital currency group, the one that Barry Silbert's running. That is actually, I have high respect for that group. It's got a number of really good assets. There's Genesis, there is Grayscale, there's CoinDesk, and if you just go on their homepage and click portfolio, there's actually a whole list of things they own. They own minority positions in things like chain analysis and things of that nature. So overall, a really good portfolio of companies. During the number 2 fiasco with the Luna Terra fiasco, Genesis actually lost quite a bit of money. So DCG came in and said, "We'll backstop you. We'll take the money. We'll take the loss at the parent level, and we'll recapitalize you. So off you go. You can continue the business." So we were very happy to see that. We're trading with Genesis. So we stopped trading with Genesis during the crisis. We restarted and so forth. And unfortunately, this second time around, Genesis once again is out of liquidity. And part of the problem is that I think DCG actually took some of that liquidity out to the parent company, and therefore now there's a lack of liquidity within the whole DCG group, including Genesis. The initial thought, some people were saying is, well, maybe they just bankrupt Genesis and be done with it. But because during the last crisis, Barry came out and said DCG is backstopping Genesis, there's no way to separate them now. So unless he wants to bankrupt the whole thing, which is probably not a need to, he's basically stuck with having to bail out Genesis, so they have to bail each other out, or the whole thing needs to be bailed out. It is not what is the right way to say this? This is not a bankrupt setup. I think at the end of the day, the total assets they have is still worth more than their liability. This is really a liquidity mismatch where they have a lot of long-dated great assets, but there's no immediate buyer, and they don't want to fire sell those assets, and they have short-term needs of cash of liquidity they don't have to meet withdrawal. So that long-dated versus short-dated mismatch is where they're stuck at. So there's no bankruptcy declared yet, but they have halted withdrawals at Genesis, which is an unfortunate situation. We actually kind of saw last Friday Asia time, last Friday Los Angeles time, Friday afternoon, we saw a number of tokens drop very significantly. I think Filecoin was down 30%, basically in an instant. I think Near was down, and a few other major tokens were down. These were all DCG's big holdings of semi-liquid stuff, and our understanding or our guess or market rumors is that basically DCG is now just selling down whatever they can sell down, and they basically went to the market and dumped it. I personally am a little bit disappointed because I would think that Genesis had better traders than that, but they basically look like they just had market sell for a large size, and the market just went straight down. Right? I think they could have managed it a little bit better. So on the flip side, I'm kind of hoping that they've liquidated enough to satisfy their short-term liquidity needs so that they can open withdrawals longer term, our expectation is that Merrill will shut down Genesis because Genesis really has not been a money-making business for him. So I think it's basically time to kind of align everything and Grayscale still makes money. It's an unfortunate reality, but Grayscale has great fees for DCG, and they have locked-up assets. So why bother shutting that down? So we think that that'll continue. Genesis, our guesstimate is that it's made probably $100 million for DCG, but it's lost probably $1 billion. So there's it's kind of hard to justify continue the business. So with them and a number of other counterparties, being really weak. Currently in the crypto market, the OTC desks are not doing very well at all. A lot of the OTC desks are not very healthy. They're not doing a lot. They're not taking a lot of risks. So the whole liquidity in the market has really slowed down. I had a chat with OSL, I think 2 weeks ago. They're a large OTC counterparty, part of the BC group listed out of Hong Kong. They said, yeah, we do, right now we're scaling back on risk taking, and all we do right now is spot. So if you want to trade spot, you can call me. And I'm kind of thinking if I need to trade spot, I just trade it on exchange. I'm not sure if I need an OTC counterparty for just spot, right? But they said, yeah, sorry, we're not really doing anything else. We're not lending, we're not borrowing, we're not doing derivatives, we're not doing any swaps or anything of the sort. So, but if you got spot, you want to execute, let us know. Like, sure. So I think a lot of the OTC desks have taken a step back. With that said, I think that is an opportunity. There is a need for the OTC desk, which serves as like a broker-dealer role in the crypto space, and we really think that we're hoping some of these guys will come back. I'm very happy to see Amber recently got their Series D done. I think this is last week, I think. They got about $300 million, and I think that's been plenty of capital for them to continue as an OTC desk. So we're looking forward to seeing how they do with that and getting engaged with them and working with them more. So I think that should be exciting. I do think that it's an opportunity. I'm hoping some of these OTC desks will come back, and we're looking forward to speaking with all of them. So yeah, I think that's really where we're at right now from a market perspective. These big blowups this year has really cost a lot of not only money but credibility with the market. With Sam Bankman-Fried feeling like he's led all the regulators through a lot of hoops, and a lot of the things are really falling apart at this point. So things are not looking quite as good as rosy for crypto. So what we're now seeing is really a movement towards regulation, which is unfortunate. I think the regulations are going to come down relatively heavily, and it's something that we are a little bit concerned about. For us, what we're looking at right now, we're looking at DeFi. We really like the DeFi space right now. DeFi overall has worked relatively well. There are some weak points to DeFi. Obviously, if you consider Terra Luna a DeFi trade, that trade ended terribly earlier this year. So that is one version that didn't work. But the rest of DeFi systems have actually done pretty well. Over collateralized has worked, and also what we've seen is DeFi starting to move up the capital stack. So I come from a traditional finance background and think about capital stack quite a bit. It's basically a reference to if something goes bankrupt, who gets paid back first? Typically equities on the bottom, you got debt on top of that. You have a layer of people that you pay back first before bankruptcy. And funnily enough, DeFi has actually risen to the top of this because it's fully collateralized. So what has happened with Celsius and what has happened with FTX, they actually went and paid off their DeFi loans before they declared bankruptcy. So that was kind of the first place they wanted to pay. After they paid, they got their collateral back, and then they declared bankruptcy and started calculating everything, which is a very interesting thing to think about because it means that at the end of the day, the DeFi liabilities are at the top of the capital stack. And that kind of makes sense because DeFi trades, if you go below your collateralization level, you get auto-liquidated, right? There's no point-appointed this and that. There's no drawn-out process. You're not getting cents on the dollar. The moment you hit liquidation point, you get liquidated, and you get back whatever you get back. Or typically, you don't get back any of your collateral at all. So, from that perspective, I think DeFi is working. There's one other weak point to DeFi, which is the bridge side. So we've had a number of issues with
bridges this year, which is unfortunate. Bridges are when you have assets that you wrap into smart contracts and to put onto other chains, and those bridges have been hacked this year, and that's probably a weak point within DeFi in terms of cross-chain compatibility. And people are working on trying to find better solutions there, either by going to a kind of a Web 2.5 model and using the receipts model, which I can talk about if that's you're not familiar with that, or going into smart contracts that are more advanced in terms of cross-chain interoperability. But basically, all those things are really interesting issues that DeFi is still working through. But overall, we're pretty excited by DeFi. We'll continue to focus on it. So let's do this one. So on to kind of regulations, and I think that's the biggest thing we're seeing next year, which is I would say a risk for the industry and also an opportunity for the industry. I see the risk side of being over-regulated, and being over-regulated means a lot of the developments that we have seen so far that we're hoping for get rolled back, some of the things become illegal, and potentially a lot of these things then move offshore from the U.S. or from the countries that are regulating it to turn into more of these offshore trades, and that would make it more limiting and more fragmented. And we're hoping that doesn't happen. With that said, I think the U.S. is looking at two major chunks of regulation. The first chunk we think that will happen relatively quickly, which is probably necessary, is stablecoin regulations. Really looking at how stablecoins will be regulated, especially when they're backed by U.S. dollars or they're supposed to represent U.S. dollars. We think where the compromise would be that it becomes fiat backed, issued by some accredited licensed entity, and the question really comes down to how much AML KYC, how much tracking of ownership they're going to require for these stablecoins to move forward. If they require full tracking, I think that's just going to be a tougher discussion in the sense that I think that would make DeFi basically useless unless you go into kind of the permission DeFi world, which we're exploring also. But it becomes a much more difficult thing to do. The liquidity drops significantly. The other major piece of regulation that should be kicking in is really the fundamental discussion of who should be regulating this. The SEC obviously is pushing for everything to be regulated by SEC. Everything falls under securities. I'm not sure that's a fair way to look at it. From my personal perspective, and this is something we talked about with Charles Hoskins yesterday. From his view, from my view, from our view, there are a lot of different types of crypto tokens. Very roughly speaking, you have security token, you have utility tokens, you have stable coins, you have NFTs, and that's four already. And I think there are actually finer shades within that, probably 6 to 8 different categories, and they're basically on a spectrum of how much of a security it is versus how much of a currency or rates it is. And in that wide range really is where crypto exists. And within that wide range, some of it could or should probably fall under SEC. Some of it should probably fall under CFTC. Some of it should probably fall under OCC, which is the Office of Currency Controller. Those are the people that actually regulate banks. It's funny, in the US, those guys are actually probably the best position to regulate cryptocurrencies, but they've not said anything at all. Like when I mentioned it, I'm not sure if any of you thought, oh, OCC, oh yeah, I forgot about them, because they've never come to the forefront to say, hey, maybe we should regulate cryptocurrencies, which I'm actually very disappointed about, because I think for certain parts of the crypto space, as a currency with OCC coming and regulating it makes the most sense. For example, right now this whole discussion of cryptocurrencies, of stablecoins. I mean, if the OCC just comes out and says this is how stablecoins should work, that would be the end of it, because they're in charge of the currency, right? So they've taken a back seat. I've spoken with some lobbyists out of Washington, D.C. to ask why that's the case, and their point is that I think their role, or they're being given a lot of pushback from politicians on both sides of the aisle to kind of take a back seat and let the regulatory side kick in, or let CFTC and SEC kick in. So they've taken a back seat on that conversation, which is, I think, unfortunate. So anyway, that second one I think is still in the air. I don't think it's going to determine very soon. Right now, SEC is ruling by really chasing after different court cases and so forth. So I think the next nearest one, which we should get a result soon, is between the SEC and Ripple. Ripple seems to be doing relatively well in that court case, so hopefully they can come out relatively ahead of the whole SEC discussion. We'll see how that goes, we're not really sure how that's going to play out, but I think the lack of clarity will continue a bit more. So that's on the regulatory side for the U.S. As I mentioned, regulations is tough, but at the same time, there are advantages to it. If we can clear up the regulations and get people comfortable, more of the larger financial institutions would probably be more comfortable participating, and that would actually drive more assets into the space, which I think is a positive. So that's kind of the balance that we're really looking at, from a regulatory perspective. The EU has also gone down a similar path. They have got the whole MiCA thing that they've passed through. That should kick in middle of 2023, and we'll see kind of some of that regulation. And that regulation should be harmonized with the U.S. regulation too. So that should be interesting. But it's certainly moving forward, and we're looking at being able to comply with all the regulations there. As a lucky thing, we are an SEC registered investment advisor. So even if there are securities, we're happy to manage that. We're licensed to do so. But certainly the demand for crypto may go down if everything is considered a security or a non-compliant security because of their marketing previously. Computer's not working, but so I'll just continue. I think there's just a few more points. There's also Hong Kong and Singapore in terms of regulations. I'll talk about Singapore first. I think Singapore has been very regulatory friendly, has been really open to wanting to do more, and we have been very excited by that for a while. But the recent blowups that I've talked about, a lot of these blowups were Singapore regulated entities, Three Arrows, Babel, Matrix Store took a hit, and a number of others were all basically based out of Singapore. So Singapore's regulatory reputation has taken a big hit from the fact that, they're regulators, but these things all blew up. So where the heck was the regulator, in all of this? So that's made them look really bad. So they've become more conservative. I think they're now pushing back away from retail. They're still allowing high net worth investors to invest in some of this, and institutional, but they're moving away from retail, which I think is probably not the end of the world. I think it's not a bad thing. We mainly service the high net worth side also, so we're not as concerned by that. But I think it's something they want to buy some time to kind of reevaluate the whole situation. Hong Kong has been taking a relatively quiet stance on this. China up to now has been anti-crypto, has banned crypto outright. And Hong Kong has not been so vocal, but more recently, I think Hong Kong has decided to come out and be more supportive of crypto. So we'll see how that goes. Part of that comes from the fact that I think Hong Kong has taken a good position on the NFT side, with Animoca being active and headquartered out of Hong Kong. So that they do want to promote that from a local perspective. They're glad to have a local champion to lead the charge there, and I believe Animoca is doing quite well. But on the other hand, I think there's always kind of that looming risk of, China picking up the phone and calling Hong Kong and saying, just shut everything down, we're not doing that. So that risk is always going to be there. So, over the long term, I don't know how that balance will balance one way or the other. So, so from our perspective, I think, next year, really it's about regulations, how that regulation plays out. But I think we've cleaned out a lot of the issues with regards to this market, and we're looking forward to kind of pushing more towards, a more mass adoption once the regulations come in. We are ourselves, Wave Financial, we're working on kind of a regulated DeFi platform. We're working with the Cardano ecosystem to try to deploy capital into emerging markets, to look at microfinancing using crypto. So really kind of going back to the whole, financial access for places where they don't have financial access, and really back to some of the more traditional themes of crypto. And we're hoping that would probably be more interesting and more fruitful as a business compared to, kind of some of the more recent crypto things that we're working on. So that is, I'll just wrap it up here. I think that's kind of our views of the crypto market. So happy to take questions and discuss any of the points I've mentioned. Happy to talk about other things that we're doing, and generally hear everyone's views also.
All right, I think that makes it